Hello and good morning, everybody. Here with Martin Penniff, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlook. Starting with a brief overview of what happened yesterday. Taking a look at U.S. markets at first. The Nasdaq is holding a historic levels above 4,170 points. As well as the Dow Jones Industrial Average, who has managed to reach new heights at almost 17,600 points after almost 40 points up move yesterday. Banks will be closed today in observance of the Veterans Day bank holiday today, just before the retail sellers outlook, along with the wholesale inventories report today and tomorrow. Yesterday we had Mr. Rosengren's speech, who said that implications of low inflation rates for monetary policy is one possibility for why the Fed has been missing on the Federal Reserve's 2% inflation target, and the reason could be that it still remains a significant labor market slack. On the currency, USD Canadian dollar yesterday at 43 pips up move, USD Swiss franc 28 points, and USD JPY 32 points all up. European markets, the German DAX 30 has managed to erase last losses with 125 positive points movement, and the price action is still in the middle, in between of the 50 and 100 simple moving averages. The up movement of the French CAC 40 is pretty much the same with 55 pips movement yesterday, but way below those two moving averages. So we're going to see if the move continues today. Bank holiday in France as well today. We're waiting to see industrial production report for the entire Eurozone tomorrow, and getting ready for the ECB reports on Thursday. On the currency front, Euro USD 35 pips down, 90 pips range. Euro pound 6 pips down, 64 pips range. Euro Japanese yen 71 pips range, 71 pips up today already. Moving to the UK markets, the FTSE 100 in UK is, as usual, delivering big ranges and managed to do the same yesterday with over 55 pips move and another 55 today already. Before the large on calendar events day tomorrow, showing inflation reports and retail outlook in the UK. Sterling remained relatively unchanged against the dollar due to lack of major events yesterday. The pound did recover some ground on Friday, but experts and investors alike are looking into a continuing bearish trend for the pound. The inflation report due this Wednesday is expected to be more dovish than the one that came out in August. The majority of investors on the market have went short on the cable after the Bank of England announced that it will not be raising interest rates anytime soon. Moving to Asian markets, the Nikkei 225, the Japanese index, which managed to retrace and add another 25 points yesterday. And also added another 35 today already. The pressure is to the downside in the next few hours. Chinese and Japan leaders meet in effort to smolder tensions between the two largest Asian economies. On the currency front, USD JPY 108 pips range, 26 pips up. The Aussie versus the dollar 73 pips range, 18 pips down yesterday. The Kiwi dollar 84 pips range, 7 pips down. Today in the calendar, we're looking at house price index month-on-month and quarter-on-quarter, Australian National Bank business conditions and confidence today, and for Japan, consumer confidence index for the month of October, and bank lending year-on-year for October as well. And then we have the Westpac consumer confidence for November in New Zealand and money supply in Japan. Moving to the commodities, basically, commodity prices took center stage, with both gold and oil futures dropping sharply on Monday. The S&P 500 closed a new record high, added another 8 pips, or about 0.3% higher, at 2,038 points, 14 pips range yesterday. Gold prices rebounded in Asia yesterday as physical demand boosted the market. Overnight, crude futures dropped on Monday after the dollar firmed, while an Iraqi move to cut export prices also pressured the commodity lower. Natural gas futures edged lower on Monday after updated weather forecasts, which is reported that there is not going to be a blast of cold in the US in the next couple of weeks, as it was anticipated, of course. That was all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.